So welcome to another edition of the More You Know Co. podcast about the people and places of Northern Colorado. Today, we have Mark Fowler with Prime Lending. I didn't mess it up this time. That's good.
Yeah, that's great.
That's awesome. Been in Colorado and in lending here for the last 5 years.
Correct.
Probably seen a lot of the changes that are happening and so forth.
Yes. Yeah, rode the roller coaster the last handful of years, so it's been great.
Are you liking Colorado?
Yeah.
Northern Colorado?
Yeah, Colorado is great. Me and my wife moved down from Montana about 5 years ago or so, and it's been a great transition. We actually absolutely love it down here. A lot of similarities to Montana, just a little bit more population. So.
A little bit more here than
just a little bit.
Just
more.
a little bit, yeah. And the winters are a little milder than probably you're used to.
Yeah. I've gradually transitioned to warmer climates throughout my life, from Michigan to Montana to Colorado. So
Michigan, ouch.
Yeah, those were the worst.
Yeah,
that sounds like
were
the worst.
So you're basically heading towards Mexico or Florida is what I'm taking.
Yeah, Mexico's not a bad idea, but yeah, we'll just keep the journey moving on south.
Nice place to visit.
I think we've put down some solid roots here. No plans of moving on.
Awesome, very good, very good. Well, the hot topics today is definitely going to be interest rates and what mortgages are doing and so forth. I mean, it's just been a changing landscape so rapidly. What the feds are doing and so forth. So kind of what can you tell us as far as what the environment looks like right now?
Yeah, so obviously we're in a very volatile market. I think that's the best way to describe it currently. Nobody would have expected to see us where we are right now, even coming into the year. A lot of projections around the first of the year was, we're in a rising interest rate market, and right. We might see interest rates maybe at most hit 6% by the very end of the year, right. December, 2022, and we hit 6% by May. And so volatile and shocking just how drastic things increased. I do not believe that it's all doom and gloom. I think every market has its opportunities, and everything cycles, right? So it was unrealistic to think that we would stay at 3% or sub 3% interest rates forever.
Sure.
Although we would love that, but
wouldn't that be nice? Yeah. Free money, pretty much.
Yep.
Yeah, It's not great for investors that are investing, and after the 1% service fee and so forth, they're making 1.5% on their money. That's not real attractive.
Right.
Yeah, but
absolutely.
So it'll be nice when you can make some money in the markets again as well because of rising rates.
Yep.
So rates went up real fast, faster than anybody thought. Where do you kind of see these leveling out at?
Yeah, that's a great question. I always say if I knew for sure, I'd probably be making a lot more money than I am because I'd be in consulting or advising. But I see towards the end of the year, actually interest rates keeping pretty level around that 6 to maybe 6.5% mark. We've actually seen a little bit of a regression in rate the last couple of weeks, which was nice. So things kind of peaked for most, mortgage lenders around 6.25, and we're back down into the high fives for the most part across the industry. Obviously, you're going to have some, some changes lender to lender depending on where their margins are set, but across the board, around high 5% for 30-year fixed rate mortgages, and so I see them leveling off right around 6 to 6.5%. Now, what 2023 brings, I think, is a lot harder question. I think inflation is going to play a huge role in that, in whether we're able to get that under control at all. In historic markets, as most know, interest rates rise in inflationary periods to try to rein that in, and so it really just depends. I think that's going to be a huge part of it, and just how the economy reacts to that. But
so, kind of what I'm hearing you say, at least from the interest rate and the lending side, is if you're looking to buy a house, it's probably a safer bet to do it sooner than later.
Yeah, I think so. How I advise all of my clients is I want to make sure that I, along with their realtor, aren't getting them into a house that they're uncomfortable with, right? They need to be comfortable in what they're getting into. As long as that box is checked, I personally honestly don't think that there's on paper ever a terrible time to buy real estate, and that's my thought process. The main part of that being is everything cycles through, and I think trying to time the market, whether it be from a home price standpoint or an interest rate standpoint, rarely works out. Like Warren Buffett always states that it's about time in the market, not timing of the market, and I think the same bodes true for real estate as well. So I absolutely do not think that it's a bad time to buy. I think as long as the home buyer is comfortable with their payment and where their debt stands, that it's still a really good time to buy. And historically, we're still in the lower threshold of where interest rates have been since they've, since the 70s. So, so I think it's still great time to buy and a great long-term investments for a myriad of reasons that we can get into. But
so what I hear you kind of saying is that as long as we see inflation kind of on the rise, we're going to see interest rates worsening. We're going to see that get more expensive.
Yeah. Now the only flip side of that, and what makes this market specifically so interesting, is there's two parts of this, and that therefore in the mortgage world and the lending world as a whole, there's two very different camps when we're talking about projections. So the one camp is we're going to continue to see this gradual interest rate increase until inflation is kind of honed in, right? That's one camp. So hopefully not what we've seen this year so far, where it's just a rapid increase, right, whereas upwards of 1% a month for a couple.
Right.
But they're talking about just a slow kind of inching upwards over time, right? Now the other camp is, and other part of this is going to be, the potential or possibility for a recession. Because on the flip side, historically speaking, once again, when we've gone into a recession, the government has stepped in and said, we're going to rein back or drop interest rates to try to stimulate the economy, right? But obviously inflation and recession don't really go hand in hand when we're talking about interest rates. One to put it to bed is rising interest rates, and the other is lowering interest rates. So which one's going to win out? Those are really the two camps that we see. And for the time being, through the end of the year, I see interest rates kind of creeping up just a little bit. Here in 12 to 18 months, it's really a gamble on and a real likelihood that we could see a drop in interest rates.
Kind of depending on what inflation rates kind of come back at and some things along that line.
Yeah, and what, if any, real recession we move into, right, whether we don't. Because if we move into a recession, I can definitely see 12 to 18 months down the road, interest rates dropping, and back to that, them trying to kind of stimulate the economy, stimulate home buying and all that. So it's really which one of those camps is going to move out. I guess to answer the question overall, I see for the next 12 months, interest rates either staying flat or inching upwards. After 12 months, I could especially maybe out towards 18 months, I could realistically see a somewhat significant drop, depending on if or when we move into a recession.
Right. What would be the factors that would push interest rates down during a recession versus pushing them up prior to moving into one? Is there a correlation there, or is that just kind of what happens?
Like dropping interest rates during the recession?
Yeah.
So the primary correlation there is tied to the government and overall economy wanting to stimulate the economy. And one of the historical best ways to do that is to drop rates. Therefore, people aren't spending as much on their on their debts that they already have. Right. Credit card interest rates are dropping. Other variable rates are dropping, like home equity lines of credit and those items, and allows these households to have more discretionary income than to go, hopefully, that they're hoping to.
Because they're spending less on all that interest.
Exactly,
right,
to dump back into the economy, to stimulate it and pull it out of the recession. And obviously all of those rates and everything have a part to play with mortgage interest rates. It's a little bit more delayed because a lot of mortgage rates are fixed, right? And so whether it would take somebody either buying a new home or refinancing their current home to actually see those benefits, unless they're in an adjustable rate mortgage.
Right.
But
which is going to kind of float up and down.
exactly.
Yeah.
Yep. It's generally a margin that's placed on some form of an index, like like the 10-year Treasury or a myriad
LIBOR
of different
or
indexes.
something,
Yeah. Yep.
Go ahead.
Well, I was going to say, right now, there's a ton of information out there that millennials are making up the largest percentage of home buyers, majority of them being first-time home buyers. What advice do you have for them being a first-time home buyer on the lending side?
Yeah, so first-time home buyers are a huge passion of mine and an area that I do a lot of work in. And so the majority of the work that I do up front is all educational. I want to make sure I always say I don't want to see what house we can get you qualified for. I want to see what you want to be qualified for. Now, obviously, sometimes those don't coincide and they're going to want more house than they can actually afford. But more often than not, especially with a little bit higher interest rates, I don't want to qualify them where their payment's going to be $3,000 a month and they're comfortable with $2,500 a month.
Sure.
Right? So I really want to see first and foremost where they're at and to educate them on what's all built into that monthly payment. So most people that have never bought a house, they're thinking about buying a car and they got, the principal and the interest payment on the car. That's it. Well, with a house, there's a lot more that goes into it than just renting. So you're going to have your principal and interest on the mortgage. You're going to have property taxes, which is a new expense for them and a rising expense currently. And then you're going to have your homeowner's insurance, which is going to be quite a bit more expensive than renter's insurance.
Right.
And the possibility of a homeowners association due or some sort of metro district tax. So I just want to make sure that they're fully informed on the front end on what goes into that monthly payment and if they're comfortable with that or what price point they would be comfortable at. As well as private mortgage insurance. I guess if they're placing less than a 20% down payment, they're going to have PMI as well. So. And just walking them through all that to make sure that they are making an educated decision. Because I feel like so many people, there's some second, third, fourth time home buyers that come to me and they still don't know what they're getting into, what they're actually paying. They're like, am I qualified or am I not? Well, I can tell you, but let's dive a little bit deeper as well, and what's all included here. So you're making an advised and educated decision, not just, oh, I'm approved, let's do it, doesn't matter.
Yeah, and I think that's so important. I hear with first-time home buyers, or I hear it a lot more with second-time home buyers that are coming to me and saying, hey, this is actually our second, but could you please treat us like first-time home buyers? Because we didn't know a ton of stuff going into the first time. And, our real estate agent mortgage person didn't advise us on exactly what we were going to have. We had a lot of surprises. So we want to avoid that this time. Just treat us like we're brand new. Right. And I love that because it gives you a chance to really guide people through the process and make sure that they know exactly what those choices are going to be.
Yeah, I think a lot of people are, what the saying is, you don't know what you don't know, but some people are also scared of what they don't know, so they don't want to ask. They don't want to, sound stupid or they don't whatever, yeah. And so, sometimes it's, trying to draw those questions out of them rather than just asking them yes or no questions. I ask any questions? No. Okay. Well, let's dive a little deeper. I'm sure there are some questions in there. Right. So try to draw those out. And also another reason why, so with every one of my clients, whether it's a returning client or first time I've ever worked with them, the kind of onboarding process is a 3-step process where I'll have the initial, generally phone conversation with them, like, what are you looking to do? In what time frame, who you're working with, all those kind of upfront questions, kind of get a shell of what's going on. Step 2 is collecting the application and the documentation to really know what we're working with. And then the third and most important step really is sitting down with them face-to-face or over Zoom over really an hour-long phone call and doing a deep dive on, okay, we've verified all this information. Now let's put a plan in place as well as educate you and answer any all questions. So they're confident when they go out and not, flying by the seat of their pants,
Right.
I guess. So.
Right. No, that makes sense. That's a great passion to have. When I first got into business, I loved first-time home buyers and then the senior market.
Yeah,
I think it was because both those markets really rely on your expertise.
Mm-hmm.
And I liked that because I was well educated and I loved passing on that information so they could kind of turn it into wisdom in order to make really good decisions.
Yep.
And
Well,
so
the thing
I
with
like
the
that.
first-time home buyers is there's so much excitement. They're excited. This is a big purchase, their first time going through it. So it's great. Like you said, we very much have the same philosophy of making sure to give them the information and educate them on that. And, we can give some advice, but ultimately it's their decision to make. We just want to make sure that they're making an informed decision on
Yep.
that.
So I think, and then really the only other aspect with first-time home buyers that I'll dive into is kind of the overall benefit, or, a lot of people, first-time home buyers, a lot of times they don't think of it first and foremost anyways as a investment. But I also, it's a little less, exciting. It's going to be their home. It's going to be maybe where they start their family, whatever that looks like. But then also reminding them that it is an investment, and there are some added benefits to outside of just, yes, I own this property.
Sure.
But it's an extremely, it's one of the most proven paths to wealth building as well. Whether it's just owning your primary residence or kind of expanding that out into a second home, investment properties, or whatever that looks like.
Right.
So I try to walk through with them the added benefits of home ownership as well. And I guess that just builds into the education point. But, utilizing your essentially purchasing an asset that is leveraged, right? If you buy a $500,000 home, you're not stroking a check for $500,000. You can, stroke a check for as little as $25,000 with 5% down, and yet, so $25,000 gets you a $500,000 asset that's appreciating at a much greater pace than a $25,000 asset. So, so that's the other main aspect that I always like to go over, outside of just the energy and the excitement about buying their first home.
Sure.
Also, how it's going to benefit them financially through the long term as well. So, yeah, just like you mentioned, Brandon, like making sure they're comfortable first and foremost. As long as we get past that, it's like, okay, let's start talking about the great things that come with this. Which
Yeah.
I think there are many. But.
And a lot of flexibility. I mean, I've certainly worked with a fair amount of first-time home buyers that then, when they're ready to get rid of that condo and move into, maybe their first detached house or something, do we keep that condominium as an investment? Well, that has a whole lot of different pieces to it. So let's sit down and discuss kind of what that looks like. And at least they have that flexibility. Maybe they can leverage that asset for a continued amount of time for a great return. Maybe it makes more sense to get rid of that and roll that equity forward into their next house.
Right.
But it gives them that flexibility where somebody who has been in a rental property for that whole time, they don't have that flexibility.
Right.
So
Yeah.
some great advice there.
Yeah, and like you said, I mean, not everybody wants to own investment properties, right? Like I was dealing with a client earlier this year, and she was looking to basically move it into a nicer, larger property. And one of the real options that she had was to hold on to her old property and rent it out, and it would have worked very well. But she was just very blunt with me and with her realtor. That's like, I don't want the headache. I don't want to own investment property. So it's like, okay, let's adjust our approach then on, how we're going to move this equity over, rather than, keeping that and, finding a down payment for the new property.
Right.
So
I've also found that when you have somebody that's been in their house for a long time, and they're wanting to maybe I'd like to keep it as an investment property, there's that emotional attachment to it. There's that emotional piece. It's hard to make logical, good decisions during an emotional time.
Oh yeah.
And keeping the family house and renting it out most of the time is a terrible idea. Because what happens is you go over there and you look and you're like, oh my gosh, I built that when I was a kid and they just tore it out. Or
yeah, you can't go over there. That'd be the rule.
Yeah,
No longer
you can
driving
no longer
by.
see
We
it.
got to find somebody to manage this place. We're not driving by. We're not walking in.
It's really hard to treat it like an investment, completely separate when you're in that situation. I've helped people actually sell that house and then go buy an investment property.
Right. Yeah.
And so,
That's an
that,
option too.
That's going to be more expensive to do that way, but I'll tell you what, in the long run, that's going to be the best
Might help your
investment
mental
for you.
sanity. So
Yeah, that's very true. Very true.
So when it comes to first-time homebuyers, there's obviously a wide range that's out there. What's kind of the most common types of financing that you're seeing?
Yeah, so there are a lot. And so it comes down to what's going to work best for the client. Me personally, and for the past couple of years, I recommend or advise my clients to put some form of a down payment. And I can get to why that is here in a moment. But that leads to, more often than not, I will, I'll work with them to get into a conventional mortgage where you can put as little as a 3% down payment. The standard is 5%, but there's programs that's still a conventional Fannie Mae, Freddie Mac 30-year fixed mortgage that you can actually do 3% down. More often than not, especially in a hot real estate market like we've had the past couple of years, that was going to get them up. That was going to get their offer looked at a little bit more seriously than if it was an FHA or down payment assistance program, for better or worse, right? So that's what we've been seeing the last couple of years. That's generally going to entail the best and lowest PMI costs. It's going to generally carry the best interest rate, however, not always. So that's more often than not what we'll look at. However, recently we've seen FHA mortgages actually have significantly lower interest rates kind of across the industry, where you can see anywhere from 1/4 to 0.5% lower interest rate than a conventional mortgage with an FHA. Now, the drawback of that is that the PMI costs are going to be higher, so your monthly payment's generally just going to offset. Now, there's tons of down payment assistance programs in Colorado. There's the CHAFA program is the best known for down payment assistance, where you'll get up to 4% of the mortgage loan amount towards closing cost, which is a great option. Down payment and closing costs, I should say. And there's Metro down payment assistance programs. There's a lot, probably more than we've seen the last several years being used right now. Back to what I mentioned earlier, though, I guess how I personally see it and advise my clients is, if they can somehow scrounge together some form of a down payment, I always think that's going to put them in the best position. With the down payment assistance program, most of the time you're going to owe on the home, you're going to owe about 101 to 102% of how much the home is valued at the time of closing. So obviously, yeah, it's great to get people into the house, right? So I don't want to discount that at all. However, there's some added risk there,
Sure.
right?
You're starting upside down just a little bit, right?
Yep. Now, in a place like, northern Colorado, the risk is minimal, but nonetheless, I always like home buyers starting off with some positive equity, some positive ownership in the property, whether that's 3%, 5%, 10%. And I think it's going to get them off to the best, on the best foot. And they're not going to be, as much risk if we have a small correction of, 2% in home values, which has been about as much as we've seen, I think, in northern Colorado, ever in 1 year, is about 2%, I think, 5%, but that was a long time ago. So even if the market does mildly correct, they're still, quote unquote, above water with their home. So that's my personal approach, and something that I, once again, back to the education piece, I walk my clients through the benefits of. If they still say, nope, I want to go to the down payment assistance option, then that's a great option, and we'll move that direction. But I nonetheless want to let them have that information and make their own educated decision.
And there's something about somebody having some skin in the game when they first get into a house. They've saved up for that money. It's been difficult to get to, and now they're investing in it. They just have a much higher appreciation of that property. At least that's what I've seen in the past. Versus I have nothing into this, so I got nothing to lose.
Right. And I think there's a big difference between somebody coming and saying, Nathan, I want to buy a house, and it's like, okay, so where are you at financially? How much have you saved? It's like, oh, we have a couple $100s in the bank. It's like, well, might not be the best time, right? But here's a path that we can set you on to get you to where you can purchase a home and be confident in doing so, compared to somebody else who has saved over maybe the last few years of the past decade, and now they have $10,000 or $20,000.
Right.
That shows that they have the diligence and the responsibility and the skin in the game to confidently go into home ownership.
Well, this is a great time to pause and thank our sponsor, Prime Lending, for our episode today. And Mark, you want to say a few words about them?
Yeah, so Prime Lending has headquartered down in Texas and has been around since the mid-'80s. It's just a very well-established, bank-backed mortgage company. So we're part of Hilltop Holdings and partnered with Plains Capital Bank and then Prime Lending. So it gives us a lot of options. We have over 400 mortgage products available to us. So we can just about make anything work out there, and also provides us the opportunity to lend nationwide. So just a great company. Has one of the biggest pros in my book when I was looking at Prime Lending was the customer satisfaction rating company wide. So there's a lot of loan officers out there, and a lot of them do business different ways. But there was a 96% customer satisfaction rating last year across the entire company, and I thought that spoke volumes. And it just shows that across the board we take care of our clients and our business partners. So.
Wow, excellent. Well, thank you so much. So you're a hive of information. I'm sure you have some interesting, I'm talking absolutely fascinating mortgage facts. They must exist out there. So
yes.
So
breathtaking.
Yes, breathtaking.
If you're still listening, you might just want to shut the podcast off.
This will take about 7 minutes, so just fast forward.
Yeah, just jump ahead. We can probably put some tags in there. This is the boring portion. But no. So some kind of interesting mortgage facts that are out there. Do you know when the first official mortgage was issued in the United States?
In the U.S., boy, that's got to be early 1900s, late 1800s. I mean, when was the whole banking system in place? I honestly don't know.
Too long.
Yeah, that would be similar to my guess.
Okay.
As soon as there's anything of value for property.
It's actually a little bit further back than that. It's actually been over 250 years ago now, back in the 1760s when the first mortgage was issued in the United States. So
Issued by the Queen.
Issued by the Queen of the United States. We're going to get a history lesson here, too. This is going to be good. Queen Washington. Tell us about Queen Washington.
Well, I'm not the lender, but...
Oh, that's a good point. Never mind. That's right.
Mark's got some facts.
That is
about the
interesting.
Queen.
1700s,
Yep.
1760s.
Yep, 1760s. So do you know what percentage of homeowners in the United States have a mortgage on their home currently?
I've heard that it's in the upwards of like 40% of people own their houses free and clear. I thought that was high. I thought it was less than that.
Probably not as far off as you would think. About 65% of people have a mortgage.
Oh, wow.
So about 35%, actually own their properties free and clear.
That is a ton of equity floating around out there in property.
Yep.
That's
a lot of cash.
Yeah.
Yes. Yeah.
It is.
Which is a positive for the real estate market right now. I guess one final one. We'll go with what was the highest interest rate recorded for mortgages?
For a mortgage?
Yeah. What was in the United States?
So it was in the
highest
80s.
Yep.
When they seemed to, at least that's when that was the latest big peak.
Yep.
Now I've heard people say, well, we had 18%. Somebody else come along and said, well, I have 19%. Somebody else said, well, I have 19%. At least you had a roof over your head.
Maybe that was in the 1760s.
Yeah, it could have been. Yeah, it could have been. So, I think it'd be realistically, it wouldn't surprise me if it was 16%, a little lower than I think. just because it seems to get blown out of proportion every time somebody tells a story. But so I'd say between 16-17% would be my guess.
I would say 18 to 20.
Okay.
I've heard 18, but
Yeah. Technically speaking, it was short lived. It didn't last there very long, but 18.4% was the highest that was
18.4.
recorded, anyways.
They refinanced at 17%.
and saved a
That's
ton of
big,
money.
Big savings.
You know, builders were actually chipping in a ton of points to buy mortgages down just so that somebody could afford the payment
Yeah.
during that time. It was crazy.
Well, that's astronomical. I mean, you think about 18%, and we're talking about 4, 5, 6%
Yeah.
now. It's a huge
People
difference.
flipping
A
out.
third of it.
Yeah.
Yeah.
Do we know where that first mortgage was issued?
I do not.
Just make something up. Nobody's going to know. Delaware. It was
Delaware,
issued in
Delaware.
Delaware, Virginia, maybe?
I think it was issued to George
Massachusetts,
Washington.
yes.
St.
It was
Louis?
St. Louis.
St. Louis.
St.
Would
Louis.
not think.
By the
Kodiak
Queen.
knew St.
Wow.
Louis.
By the Queen.
By the Queen. By
Loves-
Queen Washington.
She loved Anheuser-Busch country. It's incredible there.
Speaking of a hive of knowledge, is that the word we're looking
that's
for?
right. Yes.
Knowledge start with a B? I don't know. Knowledge.
And we've also found out that mortgage is a French word.
We did, but I didn't fully. Let's see. Tell us again. Our hive of knowledge over there in the corner.
So it's an old French word from the roots mort, which means dead, and gage, which means pledge. So the concept behind it is that you have a pledge, you have debt until it's either fulfilled or you're in default. At that point, the deal is dead. The deal is mort.
That is
And
interesting.
for
That I
our
would not have guessed.
listeners, yeah, we just got that information from Alexa's brother, Alex, right there. And it was a fun fact that we learned. on
And
the
it is
podcast
actually a
today.
descendant of Queen Washington.
That's right.
Yep.
Wish that you didn't fast
really
forward
good
through the
knowledge
7
flying around here right now.
I'll tell you, it's actually just wisdom. It's just pure wisdom.
Yep.
Yes, we can apply this in our lives.
Stay
Probably
Pure wisdom.
probably re-say it though. Someone has to repeat that, or I need to come over and say it into the lab, because you won't be able to hear me from over here.
at all.
Well,
You're going to have
Go
to say.
for it.
I assumed you were audible, so I
Would you
really
like
wasn't
me to come
listening
on?
all
That's a
that close.
website.
Yeah, you
Can
just
you-
come over and talk into my
Can
lab,
you
and
make
then you'll
it
hear.
sound like me? Here, do you want this?
No, you're actually going to like talk.
Actually, leave it there and just lean in.
Yeah, just lean in there.
So basically, the term mortgage is a two-part Old French word, which basically comes from the roots mort and gage, meaning dead pledge. So the concept behind it is when you take out a mortgage, you have a pledge for a certain amount of debt, and then when that debt is done, so either you pay off the debt or you go into default, the deal is dead. Thus, the mort part of mortgage.
Well, and also, if you had a mortgage at 17, 18%, you would also be saying some other French words as well.
quite a few.
Yes.
Quite a few.
Yes,
every
quite a
time every time the bill showed up.
Yeah.
Yes.
Yep.
Very good.
And one of you two, if not both of you, should get this correct. But do you know what the best movie that centers around mortgage lending is?
Well, it'd have to be Glengarry Glen Ross. Is that the right? Is that the right name?
That's actually a good one. I'll give you a pass on
I
that.
just watched it. It's the, gosh, I can picture it, but I know I can't think of the name right now, but I bet you when you say it,
The Big Short.
The Big Short.
Oh, The Big
yes.
Short.
The Big
Yes.
Short.
Yes.
I mean, that one centers, I guess it's mortgage industry. It centers in a very short amount of time in the
Right.
mortgage industry, but really good, indication of kind of what was going on during that time and kind of what led up to
Yeah.
it.
Kind of what
all-
caused that.
Yeah.
Yeah.
Christian Bale, right?
Yep.
Yes.
Yeah.
Yeah.
Michael Burry.
Yes. Mine was just depressing. I mean, that movie was a terrible movie. You got done
Yeah.
watching it, and you're just like, I understand why people hated real estate agents. I mean, those guys are terrible. It was just hideous.
Yep.
It was terrible.
Yeah, and then you watch The Big Short, and it's like it just kind of keeps.
Yeah,
that
mortgage
going.
lenders are
We
terrible.
hate realtors, and we hate mortgage lenders. Hate them all.
That's why regulations are so much stricter now.
Then you did Wolf of Wall Street, so you could hate, stock.
Yeah,
brokers.
yeah.
Yep.
You hate
On
anybody
there as
financial.
well,
That's
too.
right. That's right.
Create a
I'm seeing a trend here.
yeah.
We need happy realtor lender movies.
Yeah.
We do.
I
Let's
don't know if
let's
those would sell as
petition.
well.
Nobody'd go. A
Nobody'd
bunch of
go.
realtors, which is actually 50% of the population,
Yeah.
and the other 50%
I feel
is
like-
mortgage lenders. So I think we're good.
I feel like that'd be a hard pitch when we're going to try to sell that to
We want happy mortgage.
To
Yeah.
Spielberg.
to
Happy
Spielberg,
lender.
Paramount. Hey, we want to talk.
We want to mix
share-
Jurassic
Yeah, it's
Park.
going to be a positive mortage lending movie.
Uh-huh.
I don't know if it'd be big screen, but Disney Plus or streaming for sure at least. You
Yeah,
know,
I'll take that.
could maybe do.
And share the rights.
Oh, I love it. I love it. Any other fascinating, very applicable mortgage facts that you can think of?
Well, I mean, this one is, I don't know how interesting it is, but I think it sheds some light on that period of time. Do you know how much real estate values dropped specifically in Larimer County, so northern Colorado, Larimer County, but how much they dropped over the 3-year period of, I think, 07, 8, and 9, the kind of the worst periods there?
You know, I know that there was Fort Collins actually showed a 0.6% appreciation rate when you looked at the numbers. But a lot of that's how you slice and dice the area you're looking at. If you look at all Larimer County, well, that couldn't have been down more than a couple of percent.
Yep, exactly right. 2.5% over that 3-year period. So when you're looking at the worst, I mean, in recent memory, worst, real estate crisis that we've had, and over the 3-year period combined, the decrease in value was 2.5%. It's pretty shocking when you actually, shed light on that, because people look back, and obviously there's other areas in the United States that were way, way, way worse than that.
Yeah,
But,
I mean, the national average during that time was 19.7.
yeah, so kind of, so back to your question earlier, yes, it is a great time to buy in northern Colorado.
Well, and you think about
Really is.
that, right? Like a lot of people, especially right now, if you only lost 2% of your investment, would be really happy with that.
Yeah, I mean,
even right now.
Oh, yeah.
And we're still seeing positive appreciation on homes in northern Colorado right now as well.
Yeah, I've had investments that have dropped 80% in a week.
Yeah.
80%, that was a good one, by the way.
Crypto.
Yeah. No, well, that's a great,
Bitcoin,
current one. Yeah, I'm looking at what Bitcoin does. Those volatile markets, they
Right.
could lose everything in no time. It just doesn't happen with real estate.
Right.
No, there's no Enron.
You got to
with
have a
real
place to
estate.
live. Yeah. Nobody's stole all your retirement savings.
Yeah.
And something that's cool that you hit on earlier is that you can lend nationwide. I mean, we kind of have an experience right now where they were looking in Colorado.
Oh, yeah.
You got them pre-qualified. Then we were able to get them in touch with a realtor down in Florida. And so it's been just a really smooth transition from them, or from looking here in Colorado. Now that they've decided to move down to Florida, they've got everything lined up with you. So it's just going to make for a smooth process
Yep.
down there.
Yeah, no, I think that's a huge value add, and as we all know, the home buying process is extremely stressful, let alone when you're moving states. So you're coordinating the movers, and you're seeing where you're going to live once you're down there, and trying to get in contact with a realtor and all these things. And so if you can put somebody in contact, like help them find a realtor down there that maybe and where their mortgage lender here is able to, offer their mortgage and help them through their home purchase out of state. It's just one less thing that they have to think through, and one less contact that they have to find.
Yeah,
Right.
that's very helpful.
Yep. And that's really the level of service that all of us here aim to provide and strive. We want that smooth. This should be a fun experience. I mean, obviously there's going to be a little bit of natural level of stress that comes, but that's kind of where we come in to help guide them through that as well. So you had talked earlier, you kind of lived all over the United States, a couple different places there, Michigan and Montana and here. Tell us what's some of your favorite things to do, or what you like about northern Colorado.
Yeah, I'd say probably like most. What I love most about Colorado is the outdoor recreation specifically. Being in Fort Collins specifically, where we can drive 15 minutes and be in the foothills, really, out around Horsetooth. And so my favorite things, me and my wife, is hiking, getting out on the trails whenever possible, enjoying the outdoors, especially with me working quote unquote desk job sort of. It's nice to get out, especially on the weekends or whenever possible, to enjoy the trails. My number one hobby, I guess you could say, and it goes right along with Northern Colorado, is running, and trail running specifically. And so just in a great space for that. Once again, where I can jump in the car, go 15 minutes down the road and be on some amazing trails that most people, the large amount of the population, don't have access to.
Sure.
Or they have to drive hours to get there. And then just the culture is great. I mean, I feel like even though Northern Colorado is growing rapidly, there's still kind of that, I don't know if you'd call it like a Midwest vibe or whatever, just like kindness for the most part.
Sure, for sure.
Kind of permeates through the culture, and really enjoy that aspect. Enjoy Old Town Fort Collins, the restaurants, breweries, bars, all that sort of good stuff. I'd say, in a nutshell, that's my favorite aspects of Northern Colorado.
Yeah, and you're right. For the size of our community, we have a very generous, caring, friendly community here for sure. And I think that is a big draw. So many people are happy here because of the quality of life, and that translates into how they treat others as well.
Right.
Yeah,
So
well said.
here's a closing question for you.
Okay.
So day one, you're stepping into the office for the very first time, just as green as could get.
Mm-hmm.
What advice would you give yourself at that time? If you could go back and say, here's a great piece of advice, what would it be?
Yeah. Great question. Thankfully, I started my lending career with a great regional bank that was very education heavy. But I probably would have even gone a step further, where I would have poured into my personal education in the finance world, even to a greater degree. I think that's when we were talking. I mean, a big, I guess, one of the main points throughout today has been educating people, right? And walking hand in hand with them through one of the most stressful transactions, in their life. And and you want to make sure that you have the information to properly educate them, right? So when you're starting out green, and looking back on my career, you have to invest heavily in your education and know what you're talking about. Thankfully, I started off on a great foot with that regional bank, and it was kind of forced upon me. But if I had anything to change, I would have dove in even deeper on the education piece to provide my clients even a bigger value add and make sure that they were well informed.
Awesome. That would be great advice. Yeah. We're very heavy into education on our side as well. It is incredibly valuable. Yeah. Well, again, Mark Fowler with Prime Lending. We appreciate you being on the show.
Yeah, thank you guys for having me.
Thank you so much.
Thanks for coming in.
Absolutely.